Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, November 11th, 2021. The markets did put in a decent low yesterday, and I have kind of rearranged the labeling a little bit. Again, what I'm counting is on a minor degree level that I'm counting the initial 5 waves down within the NASDAQ to form the first 5 waves down on the hourly chart. And let me just take this back up to the hourly chart and reopen it so that we can see it on the hourly chart. So what I'm looking to count is 5 waves down on the hourly chart, which will begin to give support to the NASDAQ, having completed the long-term advances. And again, as I've said before, the first 5 waves down gives support to the trend change. And it'll be the first 5 waves down on the hourly chart. Then I'm looking at the 4-hour and the daily to give double and triple confirmation. And once that's received, then the longer term trend has shifted from bullish to bearish. And that'll be a major recognition by the market, I think, as well. But in any case, we're still in that initial 5 waves. We haven't even gotten that done yet. So there's still a ton of work for the market to do before all things shift in degrees. So within this first 5 down, I have now changed the count a little bit in terms of the subdivisions and minor 1, minor 2. And I do feel that this did break down into a 5, but it completed here yesterday, as opposed to me thinking that this was only the internal 3 of 3. So it kind of leaves this minor third wave as just a normal 5-wave structure down without the extension inside of it. So what that then tells us, and remember, okay, let me just review very quickly. One of the guidelines and observations that Elliott made and wrote was that within an impulse move, which is labeled 1, 2, 3, 4, 5. So within that impulse move between waves 1, 3, or 5, one of them normally will extend within the third wave of the move. So that would have been, in this case, it would have been here. But when I tried to match it against the balance, it just did not really pair up all that great for me, because it really, the third of the third was okay, but it needed to go further than what it did against this. So I had to take a step back. Now, what it really leaves open is that within the 5th wave, it could be the one that within its third wave just breaks into a 5, a quick, very hard down 5th wave, third wave, excuse me, within it. And then the 5th wave would be considered the extended wave. So that is a possibility coming right in front of us. So if we really start to get that tomorrow, then don't underestimate the power of what's going to be happening, because it would likely be within the 3rd wave extending, and all those little bounces that we'll get, there'll be 2 of them. They won't really be something to trade, except to load back up on additional shorts. So in any case, so here, if I take this, just want to give a little bit of reasoning to the count. I go to the line chart again. So the line chart does not show the extremes, the tails that we get. So when a lot of times you'll see when I'm switching over to the line chart, it suddenly will change where the labeling is placed. And you'll be like, well, wait a minute, that's not the high, that's not the low. So why is it labeled that way? Because the bar where it was occurring was an anomaly, was just a throwover. It was a tail. So it's easier to see the count when I use a line chart. And when I'm looking to clear up a particular area, I want to be able to count it out cleanly. And there isn't a little anomaly right in here, but again, being that it's just a normal and not an extended, I am allowing it. So this is where I have put minor wave 1, and you can see that's 5 down, and then we get an A, B, C up, right? C wave overtakes that, and that's wave 2. Then we start to break down again, and we get a 1, 2, 3, 4, very large slight overlap, and then a 5. This was 3. And then we had a 4, and then a 5. And then so that gets labeled as minor wave 3. Now, back over here to the candle. What my expectations are is it's a very nice ABC up, wave 4, then we get a 5, it'll be its own 5. What I do feel, what is required, if it is going to be a wave 5, it needs to create a new low underneath 15,896. So we then start to have support. Let me just flash back out, put up the bigger chart, and then go back down to the hourly chart so that we can see where support should be coming in. So we're looking for new lows below 896. What could give us some help? Support should be found at 851 in that area. Then we got additional support at 790. But ultimately, I think we could get ourselves down to 768. That is the low of the previous 4. So my first set of Fibonacci ran from there to there to give us indications of how deep this should all break down. And so far, it's been holding pretty cleanly. Also, within there, the market has broken back below the hourly 200. And everything else is now moving below it, which continues to suggest downside versus upside. Now, one other that I will check real quickly before we get ready to open here in the Globex in about 20 minutes. We'll take a look at the daily and the daily to see what's broken. Here again, we broke below the 8 yesterday. We stayed below it. They tried and they did successfully get above, but then it slipped back below. So again, we got a second close below the daily 8. So that puts into play, which happens to just pretty much match up very close, the 20, the daily 20 MA. Now, here's what could take place, because we know that when a market gets down and slides through it, there's a scramble to get back above it, to not necessarily believe that they're putting in a low and we're going to bounce off that low and get the V and everybody's going to become a winner because they're going to buy off that low. God bless them, but then a lot of times it works, and particularly in this case, it definitively could work, and I'll tell you how. Here's the support that I'm looking for this fifth wave to come down to is 15,768. Here sits this indicator, the 20 MA, at 786. So it's very much in the neighborhood. It's just a little bit under $20 away. And the NASDAQ can drop $20 and boom, heartbeat, thank you. So it can go down and bounce, and that would put the low in for the fifth wave and set the stage for an ABC. In this case, it would be corrective. It would be a wave 2, because this will get labeled intermediate wave 1. We're looking for intermediate wave 2 in this decline. And so what I'm going to demonstrate here, again, I started at the minor level. What's above the minor level? Well, the minor level is the intermediate level. So we get 5 down, that's intermediate 1. We get 3 up, that's intermediate 2. When we've done 5 waves of an intermediate degree down, what does that present to us? That gives us a primary wave 1 or a primary wave A. So again, we've got to keep our counts in line. It's corrective. Ultimately, we're looking for a larger ABC down. And that I believe will end up towards the March 2020 lows. And that's way out in the future. That's not even within our realm, our scope of observing right now. Ultimately, yes. So here on the daily, we've now broken that. I would be looking for the market to continue lower and to get down and test, and just test this time around that 20. It takes a little bit on a daily to push it, get it to close below, and then stay below. So, the market still is going to be working through we're still bullish and we're going to go back up mode as well. Don't forget that it takes time to switch gears. For a lot of traders need to switch gears because they need to switch positions. And so they're still working with likely positions that are surrounding prices here within $100 up and down. In any case, here's what I'm thinking. We're going to get that wave down. Tomorrow's an expiration that's going to increase volatility yet again, because here in the NASDAQ, Tesla still very much in play, NVIDIA in play, Netflix in play, Microsoft, Google, Facebook, Amazon, AMD, Apple, all in play. Options expire tomorrow. Volatility as these stocks, the prices of the underlying start to slide through strike prices, particularly in Tesla, which was doing it today. It created a lot to initially. The Tesla had worked its way back above 1,100. Then the next round of selling came in and took it down back below, close to 1,000, but I think within $30. And then it recovered back up again. That added a lot of the volatility to our moves during the day. And so it ended up being a profitable day trading wise. And I hope that tomorrow is going to continue to be that way. It's just being aware of an increase in the volatility of the price moves. So how quickly it'll drop down, but how quickly it will recover and jump. So remember, if you just can kind of visualize in your mind as the trading is happening, you get a bunch of sell orders are coming down, push, push, push. Once they're done, anybody who's looking to buy or cover a short is going like, uh-oh, there are no more sellers, and they just go after what's there. And if a buy order comes in at that moment, a larger buy order that's pushing all the stock prices, they're just going to grab. It's at the market and they're taking these futures. So that's what I'm talking about. So we need to factor that into our own trading, that the volatility may increase, and that's going to produce a lot of hooking and jerking around and speedy moves up and down. Okay. So this is where I'm going to leave it. Tomorrow, I am looking for lower levels. I think that upside should be limited to small bounces as this all works its way down. Again, if we really start to break higher, we have to be able to trade it. But what's going to really start to kick it is that, again, if the hourly can get back up and gets back above the hourly 50, that's going to put a crimp into this being a fifth wave in progress and put this labeling over to the side as it continues to work out its fourth wave. Or it's going to leave this as a three wave and this thing can just start to sail higher. If that's the option that's going to take place, we'll know. And what's really going to have supported is if the hourly chart gets above the 50 moving average, again, first it has to get above the 200, then above the 50, then it has to just keep going. This BS about, well, we're just going to go up this high and then we're going to slam down. That could happen, but my anticipation or my expectation if they start to break is that it's going higher, much higher. And then we're back to getting up towards 16,200, 16,300, 400. Could it do it tomorrow? Yeah, probably could. If conditions were thin enough and there was enough buy pressure on any of these, or collectively all of these tech titan stocks that have shown volatility recently. So if they all group together and then add Adobe or any of the others in there, we could get a really solid move in either direction. So stay on your toes, straight, smart, use the moving averages, use the Elliott, use the Fibonacci. Have a great trading day. Our next update will be on Sunday, the 14th.